Hello guys, I'm Paris the Options Guy and welcome back to today's video. And if you see Bank Nifty just consolidating except for this spike over here, and Nifty also if you see consolidating mostly except for this spike that came in at around about you can say 2:45 p.m. Okay, so aside from the spike, mostly the markets again continue to consolidate. But the way the markets have made this price action over here is indicating that the markets might be slowing down a bit and it might be a time for a pullback now. Now, I'm going to show you guys a few data points which are going to be a bit important and which you should definitely not look on. You should definitely not ignore. Like if you see over here, definitely pros have exited their future shorts over here, but that's a very small quantity over here if you see, right? Just 8400 contracts. But on the same time, if you see, pros have started to make a call short position over here, okay? And they have also started to exit their put short positions over here. Now, you'll be like, why do we follow pros, right? And the simple answer is, if you would have seen SEBI study that just came out over here, which I'm going to show you guys just right now over here, okay? Uh, yes, if you see this SEBI study over here, and if we go down over here, right, profit distribution among proprietary traders and FPIs. If you see, proprietary traders made a profit of 33,000 crores in FY24, and FPIs made a profit of 28,000 crores in FY24, and individuals made a loss of 61,000 crores. That means the people who are making the most profit in this type of market, in the market, are pros, and that is the reason why I always tell you guys to follow pros and not anybody else, not FIs, not clients, because pros are the ones who are going to make directional positions in the market, and these guys are now starting to exit their, first of all, you can say, bullish positions and starting to come a little bit into bearish positions, mostly because they might be expecting a bit of a pullback, and then against the markets can start to move up, right? So that means as of now we need to get a little cautious. If we see over here also, just a second. Yes, if you see over here, Bank Nifty making a sort of a negative candle over here, Nifty also making not such a great candle. Both of them indicating that the markets can take a pullback tomorrow, maybe take a pullback and then again recover and close higher. Okay, and that is also what the data is suggesting over here. So for tomorrow, the view will be pretty simple. Okay, if we again open with a gap up, let's say somewhere near 54,100, 54,050, anywhere above 54,000, right, then we will not go short immediately. Okay, then what we need to do is wait for some sort of a resistance near 54,200. Okay, this zone that I'm making is going to be pretty important, 54,150 to 54,200. Now the market can do two things over here. Either the market can go up over here, take resistance and then start to come down. So if you see any sort of negative price action being made over here, that is a lower low being made over here, you guys can go ahead and take a short position over there. Okay, that is one thing. Another thing is, what the markets might do is that the markets might break this zone, and then if the markets are giving a fake breakout, something like this, then also you guys can go ahead and take a short position over here, because then this will be a fake breakout. Then chances are market might start to drift down and at least go down till 53,800 easily. Okay, so that is something. If you open with a gap up, even if you open flat and start to move up, same thing, you can do the same thing. Okay, if we open with a gap down tomorrow, let's say somewhere near 53,800, 750, all these levels, then we'll not take a short position. Why? Because the market is already opened with a gap down. We were expecting a pullback, that the market will give us a pullback, and that has already happened. So two things can happen over here. If we open with a gap down, either we'll let the market recover and come back near 54,000, and over here if we are seeing a very good rejection from the market, okay, very good negative price action being made, some good selling coming near 54,000, then we will go ahead and take a short position from here, and then you can easily keep a target of 53,700 also on the downside, no problem at all. Okay, so that is it for Bank Nifty. Now one more thing, if we open flat and start to move down, don't take a short position immediately, because this is sort of, you can say, an obvious support of 53,900 that has been made. Market has taken support multiple times over here, so a lot of people will go and take a short position immediately as soon as we break this wick over here, right, as soon as we go below this wick, and then the markets can again give a pullback, go back up, and then maybe go down afterwards, right? So That's why don't take a short position immediately. If the market somehow decides to go down in the first time itself, that is fine. We are not ultra bearish over here as of now. Okay, we are not even taking a very bearish view on the market. We are just expecting that the market will take a little bit of pullback, and that is the trade that we're taking. So we will not be in a hurry to take a short position in the market. Okay, so that is it for bank nifty. Now let's talk about nifty. And for nifty, it is the same thing. Nifty has taken resistance from 26,000. That means if nifty tomorrow again goes near 26,000 or again even goes above 26,000 and starts to see any sort of proper rejection from there, like this candle that was made as soon as nifty crossed 26,000 and moved up, you guys can again go ahead and take a short position from that higher level, and then keep a very small stop loss and keep a very good target, because chances are nifty may also see a correction first of all till 25,800. If nifty breaks 25,800 very fast, then you will get easily 150 points more till 25,650. Okay, so for tomorrow, the plan is very simple. If you open with a gap up, let's say somewhere near 25,980, 26,000, all these levels itself, then what we need to see is any sort of a rejection that we are seeing from 26,000 or even till 26,050. Okay, even till this area also markets can go up and then take rejection and come down. Okay, so in this area, any sort of a rejection that you see, you guys can go ahead and take a short position from there. You can keep a small stop loss, not a big stop loss required at all. Okay, because if the market has to go down, it will go down very fast. Okay, so that is it for if you open with a gap up, right? First target you can keep till 25,930 on the downside, but after that you can, as I said, keep a good enough target of 25,800 also. But after that, if you want to hold even more and not exit at 25,800, you can even decide to hold it till 25,650. But one thing that you should keep in mind is that market should break 25,800 fast and not wait a lot of time over here, because if the markets wait a lot of time over here, markets might again try to recover also, because then the markets will fill this gap over here, and then maybe markets might take a good support and then start to move up again. Okay, so if you do take a short trade over here, and if the markets do come down till 25,800, please look out at the price action that is being made in the zone over here, and then book your profits accordingly. If the markets are taking good support from here, if the markets are seeing good buying coming from this zone, then don't hold your positions for long. Okay, so that is it. If you open with a slight, you can say gap up or even flat and go up. Okay, if you open with a gap down, let's say somewhere near 25,880 or 25,860, all these levels, then we will wait for a pullback, and that pullback will be till 25,950 to 980 in this area. And in this area, anywhere you see that the market is taking making some sort of a negative price action, you guys can go ahead and take a short position again from there with the same targets that I mentioned before. Okay, one thing that might happen is that markets might open with a gap down and recover very fast and break this high also. Okay, recover very fast and break today's high, and then from there also you can see a sell-off. Please keep that in mind. Just because the markets opened with a gap down recovered does not mean that the markets are ultra bullish or something. Sure, the markets might be bullish, but as of now, taking a long position at higher levels is not something that you should do, because markets have already rallied pretty good. Nifty has rallied pretty good. Bank Nifty has rallied amazingly over here. If you see, just a very fantastic rally by Bank Nifty also. So as of now, taking a long position at higher levels is not something you should do. Rather, we will wait for a pullback in the market, and once that pullback is done, that is when we will go ahead and take a long position. Okay, so I hope you guys understood what you have to do in the market. And yeah guys, that was it for today, and thank you very much for watching till the end, and I'll see you guys in another video. Bye bye.